Good morning, trading world. It is March 17, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. It's 8:10 a.m. on the East Coast, and let's get into the pre-market. A triple witching expiration hits us today with plenty of gamma risk. Looking at the option chain, and actually let me bring up the option chain. All right, now as I talk about the option chain, we can look at the option chain. A few things concern me today, and one of those being the amounts of open interest that has to be moved or rolled. When I talk about this open interest, you want to focus on this column here and just look at the amount of open interest that is on the books right now. It is spectacular. And one of the things about open interest, it says, we're drawn to these levels with these high amounts of open interest, and your guess is as good as mine as far as how far we could go either way. So that's one of the things that makes today a triple witching very dangerous and chopped with big gamma risk. I was going to highlight the three things that concern me today, and we just looked at one, being the amount of open interest that has to either be moved or rolled today. The other thing is where we are in terms of the market maker's expected move. And then the last thing is VIX backwardation. So I've showed you open interest. Let's go back to the same plot that I looked at yesterday when it comes to the market maker's expected move. Let me bring that back up. All right. So now we have a 30-minute chart with a 10-day look back. And what I want you to pay attention to is the purple line here that symbolizes the upper edge of the market maker's expected move. The purple line here that symbolizes the lower edge of the market maker's expected move. And this black line here that symbolizes where we started the week at. Now, coming into this week, I know on the ES we had like 117 point market makers expected move, and I think on the SPY, let me look back on the actual SPY itself, we had an 11.8 and change expected move. So this essentially represents plus or minus those 11 and change points on the SPY. And as you can see, all week we've pretty much chopped around this where we started the week at, continuously coming back to it. And this is very early in the day, or we still have an hour and a half or better to go before the open. Where could we wind up at? So we came close to tagging the upper edge of the expected move, but as you can see, since yesterday we have backed away from it. And it's a crazy day because of the triple witching, which means there is enough order flow for us to go a long way either direction, even all the way back down here. So we looked at the option chain, and all that open interest on the option chains, it symbolizes huge gamma risk on the tape for today. One of the things that is very important in terms of risk, and I've spoke about this before, giving warnings as we shoot back and forth through the same range over and over again, be aware of putting too much capital to work in the same range. All right, now as I've spoke about this before, imagine, well, as orders, as we continue to go back and forth in this same range, orders continue to get wound up in this same range, orders after orders after orders, and it continues to get wound up in this same range. Now, even though you're probably placing orders at different times, you placed it here this day, and the next day it was here or there, either way, it doesn't matter. We're still within the same range. And this key risk parameter that many people tend to ignore as we swing back and forth in the same range, some traders continue to deploy capital even though we haven't moved out of this range in 6 days or so. When we do break, two things happen. If you're on the wrong side of this breakout, you've already allocated too much capital on the wrong side of a move, and you've killed your account. That's the first thing. So as everybody's trying to get bearish here, looking for it to go down and continuing to stack positions, and then bam, you're on the wrong side. Now, the other thing that happens is in stacking all that and allocating all that capital here in this same area, you've just killed your opportunity to capitalize on the actual breakout. In yesterday's pre-market outlook, I showed where we were in terms of the market maker's expected move. And again, as you can see, we got close to tagging that expected move, the upper edge. So with us pinging back and forth, there's enough open interest here to really drop us back down close to the lower edge of this expected move, or if not, at least back to the starting point of the week. So we have to be very, very careful of that. The third thing that concerns me is VIX backwardation. Let me bring up something to kind of show this backwardation. All right, I'm going to give you two ways to look at the backwardation. I keep a spreadsheet that keeps track of this, and if you can remember earlier on in the week, the 9-day VIX was way higher than anything else on this sheet right here. And out of nowhere, one day it is basically evaporated. For those of us that don't have a spreadsheet, if you go to the VIX futures, which is even a better day to watch it, you can see the VIX futures in terms of expirations. The closest, or 5-day VIX, which really doesn't do anybody any good. And as you can see, in terms of less volume, but the last price on that VIX was 24.40, which in terms right now is picking up. But when we go out further, you see here the 12-day VIX is at 23. The 33-day VIX is at 24.70. The 60-day VIX is pretty much flat or in line with the 33-day VIX. So that evaporation of backwardation dried up pretty quick. So this kind of concerns me as far as a bounce that could play. But remember, I've been talking yesterday specifically. I said be aware a flush down is coming. It's not if it's coming, it's when. And we either get it before we get into this bounce, or really, to me, there's really no other choice. We can't really have a decent sized bounce without a flush out. So be on the lookout for that to take place. Like I said, this evaporated backwardation on the VIX, it kind of supports the possibility of a huge bounce that could stay for a while. This tells me to look for a temporary bottom coming into play. This temporary bottom could play out today or next week. That is the thing about reading longer term charts. It is almost impossible to pinpoint moves in less than 1 to 3 week range. All of this narrows down today to basically 1 or 2 scenarios. And I'll get into that a little bit later. All right, here we are with the key levels of the day. I'm going to go ahead and breeze through the actual resistance, starting at our Jack resistance 395 to the 396 area, Queen resistance 397 to the 400 area, and then King resistance 402 to the 404 area. What's really going to be important today are the support areas. We have our Jack support area of 394 to 393, and remember, if it pierces through that, it actually turns into resistance. Then we have our Queen support area 392 to the 391 area, and then our King support area of 390 and 387. There are 2 extra numbers on the chart here. 384 is a target that I have in mind down here for us to go get today. If we start to get cooking on the lower side and that bottom falls out like I described, or like I will describe in the scenarios. And then 374, which is the market makers, the lower edge of the market makers expected move. So if we really get cooking today trying to trace that bottom, I could even put another number up there. We could even go for that 365 area. If things really get cooking. So those are things to kind of watch out for. The main thesis for today is bearish, closing below the 396.11, and it may be a little off because I have 396.11 and the chart says 394.60 and change. That's because of the roll. When I recorded things yesterday, one contract had not rolled, but I'm going to continue to read it as I have it, as I marked it yesterday. With a projected target bearish bias closing below the 396.11 with a projected target low of between 395 and 387. Remember those three extra numbers that I gave you today. The alternate thesis is bullish, closing above the 396.11 with a projected target high of between 396 and 404. The main channel we're in is 397 down to 379. It's going to be very important today. The main channel below goes from 379 down to 364, which is also very important today. Yesterday, market strength and breadth rocketed up off the open and pinned itself to trend day type range throughout the day. I expect strength to open flat to weaker on the day, then consolidate around mid-morning. There will be a fork in the road. Strength and breadth either falls off a cliff or take off like a rocket. We have harmony between the technical side, which is bearish, and the quant side, which is also bearish. This brings us to the scenarios of the day. All right. Doing things a little bit different today. Today's pretty much a binary day as far as I can see. So I'm not going to do the normal scenarios. We have either one or two things happening today. The first scenario is we start consolidating pre-market with visits to both lows of pre-market and highs of yesterday possibly. And this consolidation builds until mid-morning. After fighting with resistance, the bottom drops out and we fall sharp and fast. At some point, out of nowhere, we get a sharp V-shaped bottom. And that's going to be here. And we start rising from there. Now, scenario number 2 plays out very similar. We start consolidating pre-market with visits to both lows of pre-market and possibly highs of yesterday. This consolidation builds until mid-morning, and after fighting with resistance, we finally break through, rocketing up the rest of the day with maybe a stall or two here and a little back. And pretty much moving up the rest of the day. So those are the two scenarios that I see playing out today. Keep an eye, if we do get scenario number 2 and we start to rise and rocket up today, keep an eye on VIX and whether it rises with the rally. If it rises with the rally, watch out for the flush coming probably next week, but it will be soon. So that's pretty much what I'm preparing for. So be very, very careful. Please have your risk in order, because you don't want to get caught on the wrong side of this either way, because we are going to move, and I mean really move today, and it could be either way, up or down. But one thing for sure is that we will definitely move today. So again, please have your risk in check. And as I often say, or not often, I usually close every video with this. Your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. I hope this helps. I've tried to put out many tidbits about managing risk, whether it's position size, how to stay in positions, how to take off positions, and even playing in like really risky ranges. And that's the thing that people don't realize. Risk is more than just position size. It's knowing the situation that you're in. It's knowing that we could likely move 50 points today in the S&P, and knowing to have your risk in check for a move like that, or knowing that we've been in the same range for the last 6 days, and knowing not to continue to allocate capital over and over and over in that same range, setting yourself up to blow out an account. So this to me is more important than direction. Making sure you have your risk in check, because you can't play this game without money, and so you have to protect that at all costs. Wishing you a positive trading day. Let's go out and make it a great one.